This is London session, Monday morning. So what are we looking out for? So the first thing we want to look out for is check what the market is doing, the trend of the market. So as we can see, there's a break of this point right here, and then this highest point that we can see has not been taken. So it means it's a bearish trend. So being a bearish trend, we have to look at the recent price action. So it kind of looks like price is trying to reverse, but then where was our last high from after this liquidity was swept right here?
Where's the reaction that swept this? So if we go deeper, you're going to see that the reaction that took out that level is this reaction right here. And you can see this is not the top of the trend. The top of this is around this level here. This is the very top of it. Because by the time price dropped, look at what happened there. Price break structure here, right? Dropped, broke the structure, and then went up to grab some liquidity and then dropped. So this was the last break of structure. So when that structure was broken and price dropped, price did not take this reaction here, did not take this structure out. Assuming this structure was taken out before this reaction was done, that means this is our highest point, but this was not taken out. So price just mitigated and then continued to come here to test this level before it dropped. So basically this remains our last valid high, right? So that means that logically until this level is broken, we are still in a bearish trend regardless of what price is doing. So you see price came here, but it didn't break this level. So assume it's just trying to return to some key points, maybe get some liquidity mitigations or whatever before we continue the bearish trend. So that's what we're going to assume right here on this Monday. So we'll be looking forward for a possible sell that Monday because of this, especially when you see how price got to that level and rejected rapidly and then taking out some structure that was kind of created right here. So yeah, so now we are in the Monday morning. Let's go back to Monday, another session. What did price do? Price came up and took out. During London, price went down to mitigate something here. But if we're going to take this trade here, if we're going to take a buy here, because for us to take a sell here, we have to start from this. This was the candle we're going to work with. To take a buy, to take a sell from here. So, and by the time we came in the morning, price was still around here. So we are hoping that price will reach this level, right? Since we're expecting price to reach this level and then price is dropping instead. So if we are reactive, we could have considered taking a sell from this level here. Taking a buy from this level. But if we didn't, then fine. Because if we're going to take a buy based on our strategy, it should be from here, from this particular candle. 50% of that candle or the beginning, since it's a short one. Let's see what the peak is. Stop loss should just be around that level. That's like 9. So if we take it to the beginning, that's like 16. So we could do 15. So if we did 15, I think that would have worked. Yeah, it would have been the trade 15. So, but yeah, we will not count this as a valid trade because from analysis, we're looking for A and so, but normally I would buy though. I would buy to that point. But yeah, I will not count this as a valid trade. So keep waiting for our sell off from this level. So yeah, price later went, took out this one and then got into our zone. So if we are reactive, actually, we wouldn't be waiting for price to reach this level because we would want to do something from here, right? From the beginning of this candle right here. That's like 20 pips. So what I will just do is I'll use 15. That's what I usually do. So we'll use 15. So let's see if we had done 15 if we would have cashed it. We wouldn't have cashed it either. So yeah. So that means this would have been a missed trade. Our entry would have been like this. Man, I don't know. This would have actually been a missed trade though. Yeah, except I did short trading from the beginning of this candle, except I did that. So yeah. And then after taking liquidity here, if we use lower time frame, we could have get a good entry there. What do we do? Let's assume this was a missed trade here. So we miss it. So we're waiting for it to take liquidity to create a change of character, and that happened right there. And then price reacted to it and then dropped us to this major stop here. This major one here. But instead of it to continue going down, it's continue going up. So at this point, we'll be waiting for price to just get to this point, and then we'll take our trades. Now that would have been a loss. That would have been a good loss. A good one because we're following our rules. This was like a 10 pip setup. So it's like a 10 pip setup right here. So this would have been a loss, obviously. Now this was our last high, right? So this, now we know that if price did not take out this high, we're not bullish. We still bearish, still looking for buy or for sales. So this was not a proper token. Yeah, it's not a proper token. So still looking for sales. So price came down and took this level out. So we're looking for price to return to this level 50%. And then we're going. Just the same thing is what we keep doing over and over again. Yeah. So we're going for this side again. Let's see how many pips it gives us. Now normally we would want to put our stop loss. That's changed something pips. So we can keep going up to 15. Remember the rule, yeah? Because we don't use more than 15. So 15 will just around 15 there, yeah. So target 105 of course. Alright, so this is what it is. This would have been our first winning trade logically for the week. And there's a re-entry here. By the time price took this level out rapidly like that, you know that okay, the buy or the sellers continue. So we'll be hoping for price to return to this last candle. Let's see if it does that. Last reaction. That brought about the break. Look at that. So if we are taking it from the trade from the beginning, it would have been fine. That would mean look at where 15 is. And that's a risk it. I don't know if I would have risked it, I don't know. But if I did, then I would have been great. Targeting violation 5 actually. As usual. So now either I got this or I didn't. There's another re-entry here when this level was taken out. So where do we target? The last bearish candle. The last bearish candle. And if I take it, using the same principle at the beginning, stop at the ending, 10 pips. Like that. I would have been into. That would be margin 5. So that would have been the trade. And on Friday, of course, this was already closing on Friday. I wouldn't take the trade either. Or if I wanted to take the trade and hold it for the weekend, this is what I would have done as well. But since this is a very wide candle, I'm likely to wait for the 50% because that's my rule. So once the candle is wide, we wait for 50%. We don't level. Let's take this thing out so we can see the candle properly. Okay. So we would have been in on the trade as well. Right there. 15 pips. As usual. Alright, and even this one would have been running almost 1 ratio 3 at this point. So 1 ratio 5, keep waiting for that. So this would have been what the week would have looked at.